time is finite. When you waste it, it's gone. And so have to be incredibly cautious and jealous of your time and how you spend it.
Welcome back to the Mark Faris Experience. Today we have a real treat for you guys. We have a rock star in the financial world, Chris Reynolds. Just hear a little bit about his background. So Chris started and founded a company, an investment planning council. So he started in 94, and the group has a 600 million market cap company. So he's going to have some really great insight for you on, how he built it from the beginning and got through that early struggle phase into growing it into a real phenom in the industry. He also has a podcast that he's doing extremely well. It's called Turning the Page. And just really excited to have you here, Chris. I know I've been hearing a lot of really great things from some of our investors about you.
Thank you, Mark. It's great to be on. I love doing other people's podcasts. It's funny because then I get other people to ask me questions as opposed to me always being the person to have to ask questions. So looking forward to actually somebody being interested in me for a change.
Well, and we want to know. So myself and the listeners, Chris, we want to know the origin story for you. Like, what happened at the very beginning to, like, did you have this big vision of creating this $100 million company? Like, what was it at the very beginning that you did to launch? And maybe you could share a story around that as well.
Sure. Everyone always asks that. That's always one of the first questions. How did you have this grand vision? And did you?
Well, because Chris, you people look at you and they're like, that guy was always successful. I mean, like, I can never do something like that. He's just always there, right? But yeah, so sorry to cut you off, but
no, because that's what I get a lot of times. But it's a myth, and what I mean by a myth is, how I got here was I was a financial advisor, and I could even back up that story. How I became a financial advisor was my dad trained racehorses, so I grew up on a horse farm just north of Toronto, and of course, when my father had me, he saw me as free labor. So, as a kid, it was always mucking stalls, always working on the horses. And there used to be this guy that used to hang around the farm all the time, and he owned racehorses, but he never seemed to work. He'd show up in his Mercedes, and he'd have his big Zach Morris phone before anyone had a phone. And he lived in this big sprawling house. But the more important thing is he didn't have to get up early like me, and he didn't seem to work all that hard. And so one day I said, what do you do for a living? He said, I'm a financial advisor. And I'm like, I don't know what a financial advisor is, but that's what I'm going to be. And I was probably about 15, 16 years old at the time. And, I also run to the obsessive compulsive nature. So I started to go to the library, check out books on finance, on business, on wealth, on this and the other thing. And then I lived I'm in Florida currently. I lived in Florida for a bit, came back to Toronto, and I saw this little ad for financial planning. And I'm like, oh, I remember that guy that made all that money. And it was a financial planning assistant. And so I'm like, well, that guy made lots of money. I'm going to go do what he did. And so I applied for this job. And
how old were you at that point? How old were you?
20.
Around 20.
I just got back. I was actually deciding whether to go to university or get a job. And I thought, well, let me go try it out and I'll see. And I can always go back to school later. That talk that young, arrogant people have in their minds when they're making these kinds of decisions. And at the beginning, it was more or less a glorified telemarketing job. My manager said, here's the book of leads, which was the phone book. And you'd call people up and you would try to get them to, at that time, buy insurance. But you know what? I loved it. I love the people. I love the solving problems with them. I love the whole freedom of, working when you want, how you wanted. And so, just started to build up from there. And eventually that was more insurance side. Then I got into the money management side because I thought mutual funds, that's the secret. That's the future. And this was the early sort of 90s when, the interest rates had dropped. We had a phenomenon called the GIC refugees where everyone was moving out of GICs into other investments. And mutual funds, of course, was one of them. And I loved it. As I said, just loved it. I loved everything about it. I love people. I loved, as I said, going and helping them solve problems, dealing with, they would refer people to me and I would help them. And I built up quite a little business. And, but I was with another company. And how Investment Planning Council started was I actually got into a big fight with management, which was we had a completely different view of the future. I'm like, you should invest in something called computers. You may have heard of them. This is the time to maybe automate some of this stuff. And you should do this and you should do that. And let's just say we didn't see eye to eye. So I said to myself,
so they didn't think that computers were going to be a big thing?
No, that was just overhead back in the early 90s. No one could get their head around where we would.
Geez, you're right on that one.
Today, it doesn't sound, it sounds pretty prolific, but it wasn't at the time. And then I just sort of, so then I said to myself, well, if these guys could run a company, I could run my own company. I'm like, how hard could it be? Look at these guys. They're not even that smart. That was in my head anyhow.
Yeah.
Now, in hindsight, it was really hard. But at the time, I just formed, got together and formed what is now Investment Planning Council. And was there any grandiose vision? Back to your original question. The answer was no. I had my own little business. It was doing great. But then, by virtue, we started talking to other people who are sort of financial situation. From my point of view, regulation also started to change in the industry, which started to change the dynamic in the industry. And a lot of people who own these businesses didn't really want to run them anymore. So I said, well, I'll buy them from you. So I started this buying up my competitors. And over the years, believe it or not, we've done 26 acquisitions to get to the size of that we were with IPC. So, bought a lot, integrated the companies, went through that whole roll up thing. I had read a book called Making of a Blockbuster, which was by Wayne Huizinga, all about the roll up of the video industry. And as if you know Wayne's business, he also rolled up the waste management business. He also rolled up the used car dealership. So I'm like, we can do that in our industry. And so that's how we literally got to where we are today. There was one more transaction, which is an important transaction, which, a little bit over a year ago, we sold the whole company to Canada Life. And so now we're consolidated with them. So today we would represent probably about 118 billion of assets under administration. And we have about 2,000 advisors across this great nation of ours.
Oh man, Chris, there's so much there that first off, it's really important for all the listeners to understand that Chris is he's the top 1% of the 1% of the 1%. So he started from scratch back in the day and he grew and scaled up his own company, but then he was buying other companies and then he went full exit and he sold the whole package up for, we'll just say a big number. There's so much that you said there in that story that I just want to quickly go through. First, growing up on the farm, that Chris, I don't know if you know that about me, but I grew up, there's we had cows and chickens and my dad, and it was the same thing as like free labor, right?
Exactly. That's why they had kids back then.
But like the work ethic was something that, we used to go pick rocks out in the field. And that was something like, eventually you run into a big rock and you had to get the big Huff tractor out, scoop them out. But that's the kind of stuff that teaches good work ethic. And so I just think, for us now, we just get the job for the boys because we're not living on a farm. They do the dishes every day. That's their job. Right. And so I think that work ethic for if you have kids is so good. But like having that as a strong foundation at the beginning, and then you did cold calling at the beginning and you got your reps in. And I think that as a business owner, we get, you're on social media and you're like, I'm going to start a business. And then you don't want to put the reps in, but the reps are really what builds the skill in order to facilitate holding that extra weight and being able to get to the next level. If you don't get your reps in the skill set, you can't go to the next level because the next level, people won't respect you the same, right? I found like the top producers need to, like these guys are rock stars. They need to build the respect who they're working with. And then you said, I love working with people. And this is where like a genuine love of people, I think in any service business is like that's one of the foundational pieces of if you really want to be successful. And then you said, look for problems. This is something that I just want to draw on, that there's generally a business opportunity where there's problems. And so that's something Chris found problems, and then he ended up diving in and solving. Computers, what would you say is that's like hilarious now, but at the time it just wasn't that obvious. Do you think there's something today that is kind of like computers that people think that they're not it's not going to be a thing, but it's actually kind of the next computer kind of surge? Is there anything out there right now that you're like, this is
question.
big?
And as much as you hear a lot about AI and the jobs that they will take over, and there is a lot to be said for that, right? The repetition jobs. And I think that the companies who are not looking to get rid of those types of things out of their everyday life and use automation for it, because the one thing no technology can take the place of, AI or otherwise, is what you and I do, which is deal with people, understand people, know what they want, what they don't want, how to develop relationships. But I see a lot of, I'm going to call them entrepreneurs, who don't embrace those types of new technologies to take away that day-to-day work. They're like, oh, no one can do it better than I can. I'm like, no, everybody can do it better than you can. Right? The thing, the skill to hone is the skill of relationship building, because at the end of the day, that's the only thing that's going to pay the big check. None of the other stuff is going to pay the big check.
Okay, there's a couple of directions I want to take this. So let's dive in first to the relationship building. What do you think are some things that a business owner or entrepreneur or anybody in the service industry can do to maybe build that skill set of building stronger relationships?
Well, the main thing that I think so, and I certainly discipline myself even to this day, is I spend a third of my time with my customers. Because you can convince yourself that, what I'm doing is busy. But if you're not actually sitting down, or in the case like this, I yell at a computer all day, and talking to your customers about what they like, what they don't like, what they hate, more importantly, and how they see their business or their selves moving forward, how do you possibly refine? How do you you can guess all you want, but I say, why guess when you can actually have a conversation? And in this day and age, very few people feel listened to. Right? They feel they're being sold to all the time, but very rarely do you ever have somebody sit down and ask you questions for a solid hour about what you like, what you don't like, what your ambitions are, what your family's doing, where your next vacation is.
Right.
And if you should spend way more time caring about what people think, it just helps to build a better business.
Yeah. Oh, that's so good. There's so the relationships, how to win friends and influence people, Chris.
My
that was
book.
one.
Nine times I've read it because I still don't have any friends. But
well, I never heard it quite put like that, but I'm sure that's definitely not true. How likable you are, but you did, Chris, what most people didn't. You're reading it more than once, and that's actually one of the things at the beginning of the book. Dale Carnegie says right at the beginning, he's like, this is not a book to be read just once. Like, you need to read it multiple times for it to be able to stick, right? Because I think we need to be reminded more than we need to be taught. They're like simple basics, right?
Well, it is basics. And again, that's why I've read it so time, because you start reading it, you're like, I forgot, like I had started to do something. Well, I stopped doing that. I stopped doing that. I stopped doing that. And if you can develop those habits, that's why now, we talked, I know one of the questions is about, habits. One of them is time. How do you manage your time? And if you're not spending a third of your time, which I track like a religion, with your clients, you always have to ask yourself where you're spending your time. Those other things are not money-making activities.
Well, and this reminds me, in the book Scaling Up by Vern Harnish, one of the stories they have with exactly what you had said was one of the CEOs was out talking to his clients, doing exactly what you recommended. And they were in they were taking calls. There was a call center, and he was out talking to one of his clients, and they were charging, let's just call it 10 cents a call. The customer told him when he was out, he's like, listen, if you can book appointments for me, I'll pay you $1. I'll pay you 10 times as much for appointment. And so he took that idea back and he changed his whole model around into booking appointments, and everything went through the roof. And so he listened to the client doing exactly what you had said, and he put that together, and then he executed, and it revolutionized the business, and to like the value of the business increased immensely. But that's the thing. Nobody else is out thinking like you are as an entrepreneur. So that's really important, to be out there talking to the front lines and not to be up in the skyscraper head office where like you're losing touch with your people, so to speak. Right.
I one time heard an executive say, I could get a lot more work done if these customers weren't calling me all the time. They don't have a job anymore, but that was a statement that was made one time.
Oh, and it's so good. And, we get distracted. We get busy doing things that we think are important, but that's just such great counsel, Chris, that you said there is like, speak to your clients at a third of a time. And I like how you labeled the number, like a specific number, like a third of the week. We'll call it, like, let's just say, make it easy. If you're working 60 hours a week, that's 20 hours speaking with your clients. And that is any service business and any business overall. Like, who's your end buyer, whether it's B2B or B2C, like, talk to them. And, some good questions is, what should we keep doing? What should we stop doing? What should we start doing? Right. Like, just simple.
Well, the best one is what's really annoying, because it's never the big things that make a client leave. It's the little annoying things that nitpick them. And so if you can get a good handle on what the annoying things are and just stop those, that's half the battle.
Oh, that's so good. Yeah. And, I think a lot of times we kind of guess what is annoying. You get the leadership team in an office and like, yeah, we need to not do this. The customer may not even be seeing it or even realizing that it's even there or even noticing it. But if you go and spend a few minutes and ask them, this is one thing that we do in our company is we end up having a weekly call. Everybody in the leadership reaches out to a client once a week, and then we meet as a leadership team and we actually share that feedback on a weekly basis. Because for both the investment firm and then on Faris team, the mission for us is to provide, it's either the best investing experience in the world or the best real estate experience in the world. And the way that you get better, or we'll say if best in the world is over there, which is more of an aspirational thing. Like, will you ever get that? I don't know. But the way you can become the best that you can is by collecting feedback from clients and from team members, and then just fixing the stuff on a weekly basis. So it's like an actionable thing. But it goes back to your counsel and advice of like, speak to your clients and try not to get distracted, especially when you become successful. Right.
Well, that's the time that, that the peak happens and you see so many companies. What's the stat? Even on the Fortune 500 companies, something like 20% of them don't exist anymore after 20 years, right? Don't exist. They were the top 500 companies in the entire world, and they're not even there anymore. And in almost every business case that you can follow, it's at some point they stop listening to their client.
And it's almost, it's like a reality check for a lot of business owners that, a lot of business owners, Chris, they have this goal that they're going to build something like you did and go a full exit, cycle and sell it. But to get to that, it's like making the NHL. It's like, it's like being on an all-star. Well, we'll call it the NHL. You're the top of the top. So the odds of actually going full cycle and selling a business versus like, okay, it's rolling its lifespan out the business, and then you end up, maybe it folds, or you give it away, or you get some sort of sale. The question there is there anything that you think, outside of maybe speaking to your clients, that a business will just say at the end of their cycle, they just, they're just going to shut the door? Is there anything that they did to make that happen? And is there anything that they can do outside of speaking to their clients to be able to give them a higher, we'll say, chance of selling the business?
It's a very good question. One that I sort of, because, in the role that I have, every advisor that's in our network is an entrepreneur on themselves, right? So it's the constant advice I'm always giving every entrepreneur. And I know one of your questions down, so we'll skip to what was one of my favorite books, the pivotal book that, sort of changed my mind and my viewpoint on building a business. And it was a book called The E-Myth by Michael Gerber. Literally my Bible. And I remember seeing Michael actually speak, here in Florida, in Orlando. And it was at a time where actually I thought he was talking about e-commerce. So I actually went into the wrong room because I thought I was going to learn about e-commerce. And as he started talking, I'm like, and if you don't know the premise of the book, it's the difference between a practitioner and an entrepreneur. A practitioner builds a job, an entrepreneur builds an enterprise. And as he's describing the practitioner, I'm like, that's me. Like I'm doing it all. Yeah, I'm doing everything. I'm washing the dishes. I'm the marketer. I'm the HR. I'm the technology expert. I'm also the person who needs the production. I'm not building a business. I'm just building myself a job. Whereas a business, an entrepreneur type is building something that it can run without you. Something that is built on great systems to solve a specific problem to a specific niche market and can do it over and over and over again. And if your market is big enough, you can continue to expand over and over and over again. And the example that I use, and I've used this in one of my podcasts, is I use Starbucks as the scale, as the ultimate of this type of business, right? It's a coffee shop, right? It's a coffee shop. Yeah. They serve coffee. Yeah. And if you go to Seattle, I don't know if you've ever been to Seattle, but you go down to an area there by the wharf, and it's called Pike's Place. And if you see a huge lineup outside of this one place, you're like, what is that? Where's everyone going? They're going to the first Starbucks. And what Howard Schultz did was he created that business system in that location. What should it look like? What should the colors be? How should the staff dress? How should they greet people? What kind of products should they serve? What kind of coffee? What kind of teas? Like everything. And then they took that concept and then they duplicated it 30,000 times. And now they have a market capitalization of over $125 billion in our life. Well, my lifetime anyhow. Yeah. Right? So from a concept to $125 billion market comp in a coffee shop. That's the difference between being an entrepreneur and being a practitioner.
Oh, that is great. And there's a great movie called The Founder. Now, I think Chris and both of our businesses, I think I like the Starbucks analogy there because it's just that next level and, like premium first class service. But the thing that McDonald's did really well, and in the movie, if you haven't watched, if you're an entrepreneur, you have to watch The Founder, where they talk about kind of the origin story of McDonald's and how it launched. And it was really interesting on how they actually started that and how they mapped that out and how you can systemize something where you can get it down to the seconds. And so this is where in some businesses, there's like this whole lean manufacturing and Six Sigma and trying to minimize waste where we're learning from the automotive. Is that something, Chris, I know in the service side of it, but I guess minimizing waste with scale, how have you been able to balance growth? So growing top line revenue and then making sure that your expenses are not outpacing your revenue, but you're not wasting at the same time. Is there any maybe, filters or implementation that you did to be able to help that scale through the years?
The one thing that I think that we do or did and still do to this day is, and it's probably one of the Six Sigma concepts, which is Kaizen, which is just constant continual improvement, but on every aspect of your interaction. And so, the big thing that our team tries to do is we always start with, okay, here's the client. Once again, so how can we do this better? How could we do this better? And as I said, through the conversation, what really annoys that client? So how could we, and we're not trying to make grandiose changes to the business per se, but if you have everybody in the company constantly thinking about, if I could just make one small change to make that better, then all of those little things equal something. You're like, the business that you have has completely transformed itself in a 3-year period. But if you constantly have that, I'm going to say, the companies that I admire are the ones who have that unrelenting focus on the client experience. And they put that even above, bottom line sometimes. In other words, they're willing to make the investment in a great client experience because they figure, and I would too, that their best source of new clients is the clients they have. And so if they put in the money at the time, then they will, word of mouth will carry that company. But I see so many, like even think about the restaurant business. I go into so many restaurants. I'm like, why bother? Like, why are you guys in business? Like, why? Everything's terrible. Like, everything's terrible. Who do you serve and who do you want to serve? But they think that that's a business, and it's not, because you're way better at, at least focusing on one aspect of the business, like quality food or quality service or, great location, like something. But some of these, you're like, why bother? Like, why do you guys even bother to be in business?
Chris, it's becoming very clear and evident why you are so successful. And I think for a lot of listeners out there, it's very easy to think as, selling, building a multi-$100 million company. It's like you get these kind of visions sometimes of, maybe they're just like cold and stiff and they're locked up in the corporate building somewhere. But the reality is in order to get there, I mean, Jeff Bezos is another good example, right? Like he's like, listen, we don't focus on our competition. And I'm sure they have people keeping an eye on what's going on in the market, but his primary number one focus is the customer. And so they have these kind of blindfold on, and they're like, okay, the customer experience, that's the mission. That's the mission. And so how on earth, Chris, do you keep that as you're growing and scaling? And, I say sometimes business is like whack-a-mole, right? Like you fix something and then all of a sudden it's like something else comes up, and then it's like that constant. So how do you keep everybody focused on the customer experience when, there's like chaos going on?
Well, it's not always easy. But there's a couple of questions that I always ask, when all these things come up. The first question is when, and mostly these things are happening because a customer is unhappy about something, right? Or you have a defection, or you have, something happens. That's where the big, whack-a-mole comes up, where everybody panics, we've lost a big account, or, this has happened or that's happened. And my first question always is, was that really our client to start with? I think there's also one of the big mistakes that entrepreneurs, especially, ADHD guys like me, is you're always bouncing around. You're always like, oh, we should do this, and we should do this for this client. We should do this for the other clients. And outliers, I've come to the conclusion after however many years in business, outliers kill. The more that you try to accommodate outliers from your core business, the less you'll be able to focus on your core business. So what you're better off to do is focus really, what is your core business and who are the clients who most appreciate that? And if one of those clients leaves, now we have to relook at everything we do. But if it was some outlier who, did whatever, we're not changing our practices and our business because one outlier who didn't really like what we did in the first place left. And that keeps that sort of panic mode down because it hurts emotionally when those things happen. But you always have to think, was that really my client? Because, and I'm writing a book, and one of the chapters is not everybody's your client. And the quicker that you can get your head around that not everybody's your client, the easier it is to provide great value for those who are your client.
Oh man, that's so good. So good, Chris. And one thing, guys, if you notice how calm Chris was. Like if he was your leader and something just went off that was, we'll just say a bomb dropped off in the business. And I'm only using that as a, not a literal bomb, just for you that are the guys that are listening. Okay. Let's just say a big customer, you lose the account or whatever. You want a guy like Chris as a leader to come to you and say, listen, in a cool, calm, collected voice where he's not panicking as well. Like the leader of whatever, it's a department or company, they got to be that cool, calm, collective voice, because the company will feed off of the panic or the stability that you bring, and confidence coming into those conversations is really powerful. And then if you'll notice what Chris did as well is he asked a very good question. And so this is where, as a leader, a lot of times we come into these situations and we're thinking, oh, I got to fix this, or I got to come up with the solution. But what I found as I started scaling up our companies is that it wasn't about me coming up with the answer. It was just me coming up with a really good question, right, which the company or the top leaders will come up with, or maybe it was even a frontline staff, right, that will actually come up with the right answer on how to handle it.
I was going to say, most of the answers are going to come from the people who actually do the work. Like,
that's right.
Sometimes that message gets filtered upward, but there's always that filtering effect.
Oh man, there's so much here, Chris. Okay, so what would you say that a entrepreneur, so they're doing well in their business, and they're making profit, but they say, you know what, I want to scale this up. What would you say, like an existing business that, or maybe they're doing a million in revenue, and maybe they're profit, which is decent, maybe they're doing 15 or 20% profit, which is still decent, and they want to get to like $1 million in profit. Right. What would you say that they would need to do around that scaling size to be able to go to that next level and take it so their revenue can increase in profit?
Well, I think there's two things. You got to first identify very clearly, and I'm sure that they have if you already started the business, but identify, incredibly clearly the unique problem that you are solving better than anyone. And then the question is, are you solving it better than anyone? And so if you have that, because if you don't have that, it really doesn't matter what you do, right? So in other words, if you sell, going back to my restaurant thing, if you have a bad product, it doesn't matter what you do, right? Nobody's coming in there. You can give coupons away. You can have free, you can open 10 locations, but if the first location is terrible, they're all going to be terrible. So first, really go back to say, is it really solving my client's problem? And then, as I said, going back to my second question, who is my client? And how big is that market, and what is the best way to reach them? Because if my product is great and I know who my client is and I know how to find more of them, then that is the system that you build to scale. You just do more and more and more of it because your product is great. You're solving a problem that is known by a specific niche. And if you have the processes in to, build the funnel, move them through, you have the right measurements to know what works and what doesn't work, you can do that forever. Like, as I said, you can go like think of Starbucks, think of Pike's Place, from one little location, which is not even 1,000 square feet, to $125 billion. But they had to get the first one right. And one of the things is we don't get the first one right, and then we try to do more of them, and then you just have a bunch of crap, right? So you're building crap on crap. But if you have the first one down pat, it's very easy to scale upward because you just have the right people running the right systems.
Okay, so just to recap, the right client with the right offering, the right client, the right product. Right. Or service
or solution or whatever. They have to have a problem that is big enough that they realize it's a problem and you can uniquely solve it in the marketplace. And that might be, when I say uniquely solve it, might be price. You can be better priced. It might be better service. It might be better experience. Not all of them, as you know, right? One of them, you have to pick your battle, but which battle is the biggest problem that has the biggest potential for market? And then that's how you would scale up your business, is based around that original, what I call prototype.
So guys, just on that, so what Chris is saying there is to pick the number one problem. And that's the key too, right, Chris? You got to pick the right problem, because that's where you could be working on something that's theory of constraints, right? So you got, if you're trying to fix another problem that isn't where the kink in the hose is in the business, you're not allocating resources in the right area. So it's like figuring that out and finding what is that bottleneck. Why aren't you growing, and spending a lot of time there is key. And so what Chris is saying, like, focus on the one thing and get all of your attention to that, and not get distracted with all these other things that are, just are not the main reason why. And if you have that kind of focus on one problem, it's more likely you're going to fix it. Right, Chris?
Right. Because it's easy to say, and I take this, I consider Steve Jobs a mentor that I've never met, but
right.
As a mentor that I have never met, the one quote that I go back to all the time is, why we're so successful at Apple is we say no to 1,000 good ideas so that we can focus on one great idea. And I really take that to heart, especially if you look at the wealth management business. We love products. I don't know if you ever looked at our business, but there's literally 40,000 mutual funds in the Canadian space. 40,000. Do you think there's 40,000 ways to solve the 3 problems that clients have? Right. And the answer is no. So some people are what I call Me Too offerings. If you have a Me Too offering, you're never going to be successful. So just give up.
Oh, so good. That's great. Such great wisdom there. Is there a misconception, or maybe there's a myth about the financial industry that, the listeners, they're not in the industry, they look in and, is there anything that maybe you can kind of myth bust about the financial industry overall?
The real thing is, and probably I shouldn't say this, maybe that'll cut into my my secrets, but the secret in our business really is that the real value is not created in the investment itself. The real value is created in helping people with their own human behavior. Really what a good financial advisor is there to do is to keep you from making bad choices, not necessarily making good choices. In other words, and I'll say this, I've been in the business a long time. I haven't met that many people who can add a huge amount of value on a consistent basis to the investment process. Meaning, if you invest well, you'll make a good return, probably better than the average. But Warren Buffett, who's considered the best investor of all time, is only average about 15.7%. So the anticipation that I'm going to get huge returns is probably a false premise. However, when the market drops and you want to pull all your money out, that's when the big losses happen because they're permanent, right? When you are hesitant on putting the money in at the right time, that's where you're going to make the big losses. When you have to make these important decisions throughout your life on what to do or what not to do, that's where an impartial person can really create value. So there's an impression that, from the outside, that all the value is created through the investment process. I'll be telling you it's not. It's all created through the advice process and the relationship process and the client experience process. You have to be good at investing. Don't get me wrong. You can't be you can't have a bad, as going back to my original, you can't have a bad product. You can't be losing all the time. But the real value is keeping people from doing dumb things.
I've never heard it quite put that way, Chris. And I know Warren Buffett says the rule, investing rule number 1, don't lose money. Rule number 2, don't forget rule number 1, which aligns with what you're saying. But the role of the advisor is to keep you from making bad decisions, where it aligns really well with what Keith Cunningham talks about. He wrote this book, The Road Less Stupid. And his whole thing is just don't do stupid things.
That, but I'm good at it.
No,
exactly.
It's really good. The guy's at heart, he's an accountant, and he is originally, but he scaled. And his story is he built $100 million company and then lost it, and then he made it again. And so his whole thing is like more companies die of indigestion or doing stupid things, and versus just kind of staying in alignment and focusing on maybe less things but doing them well. So that's really well said, and I think the listeners can really benefit from that. Somebody that is advising and counseling you before you make big decisions, and that they have somebody that has your true interest at heart. It
isn't emotionally attached.
Right.
To that
That's
decision,
right.
It's hard when you're to see your portfolio drop 20% to put more money in. Like, it's against human nature, and yet that's what you should do.
Isn't that funny? Because so here's the thing, Chris, we're seeing this in the real estate industry now, where we're buying these 100-unit apartment buildings, and we're getting like 25% discounts from the peak of the market. And it's like, it's just not sexy to buy real estate, but you're buying them at a discount. You're getting them at a discount, but there's a lot of uncertainty out there in the market overall. And so you show them the data, which it's been helping for us, but overall real estate, it's the same thing. So how do you work through and advise a client when the market just dropped by 20, 25% to say, hey, listen, I know that there's a lot of negative news out there saying that it's a horrible market and all your friends and family are saying, pull your money out. How do you even have that conversation to be able to like give them peace of mind and, confidence that, listen, this is actually the right thing to do right now? How does that conversation actually go?
Well, hopefully that conversation isn't happening at the time where it needs to happen. In other words, hopefully, if you have a good advisor, they're telling you that this is going to happen at some point, because it will. Right?
Right.
So hopefully they're working with, if you were my client, I'd be telling you, this is what you own. These are the types of companies that you own. This is why you own them. This is what we expect out of them. And there are going to be times where, for various reasons, you have a knee-jerk reaction to short-term events, which are going to cause your portfolio to fall. At that time, if you still believe in the companies you own, our reaction should be to put more money into those companies, not less, because it just means the same valuable company that we're getting at $1 is now selling for 75 cents. So, but if I was to have that conversation, never have that conversation, then one day you're like, come to me like, Chris, man, I just lost 25 cents on every dollar. You're a bum. What should I do? And then I try to have that conversation. It would be a more difficult conversation because now your emotions are closely attached to all the things that are going on. But if I've prepped you over years that this is going to happen, you'd be like, Chris was right.
Oh, that's so good. And that makes a lot of sense I know for me, and I know for the listeners out there, it's like, give me a heads up what's coming down the pipe. Like when you're jumping on a flight and before you take off, you have the pilot come on and they say, listen, there's going to be some turbulence at this point and we're actually going to get there a little bit late, 5 minutes late, like 10 minutes late. You just knowing that it's coming down the pipe, it lessens this thing. And so with what Chris is saying there, you can apply that to your own business in your own industry, regardless. Every customer that has potential objections or situations that maybe will come up down the road. And anytime you can get ahead of them and you know what they are, like write them all down, everything that could come up or any sort of objection, write them all down and write an actual response or way we're going to handle that when it does come up. And then what can you actually, and then if you can tell the client ahead of time before any of that comes up, so that even if they have the question in your hand, if you're pre-handling the objection and telling them before it even comes up, it gives customers and clients more peace of mind ahead of time, and they see like, oh, this guy's on the ball. Does that resonate,
That's
Chris?
Exactly it. There's a technique we use, and you may have heard it. It's called the pitch deck, and the pitch deck is designed to do exactly what you just said, which is answer every possible question before they're ever asked, and including address every objection before they're ever asked. Years ago, there was an article that came out in the Globe and Mail that was the 32 questions you should ask a financial advisor before hiring them. And I'm like, here it is. Here's the 32 things and that I would like to know before I would hire an advisor. We simply took those 32 questions and we made what I call it a pitch deck, which is, let me answer every question that you should be asking. You might not even know what questions to ask, but here's the questions you should be asking, and let me answer them all for you before we engage. And by the way, you'll learn some new ones. Probably is 36 now because there's some new ones that we've found along the way. But if you're, to your point, how do you make your business better? Always updating based on your customer feedback, your pitch deck. How are you making it and overcoming the objections to the point where they don't have any?
I love that. And so that's a very practical tip for all of us in any business, even if you're a sales representative, like in any business, that's super powerful. Chris, what do you do, or were there any habits as you were scaling up and maybe today, like you're a fit guy, super successful, you look healthy and you're financially, like, what daily habits maybe have you implemented in the past or that you're currently implementing that has really helped you to be able to, operate at this, we'll call it at this Olympic level when it comes down to being an entrepreneur?
My obsession is with time. So I have an obsession with time. Way back, and I'll give him a shout out to, I took Strategic Coach way back in the early 90s, which is a coaching and they've been on my podcast as well. And I had a coach as well. And the main thing that I always got out of all of them is time is finite. When you waste it, it's gone. And so you have to be incredibly cautious and jealous of your time and how you spend it. So as you said, I work out every day, so that's a habit, and that 1 hour doesn't get moved, right? It's in my calendar. My assistant has to work around it, don't work around it. And, no matter where I am in the world, that's what has to happen at that time. I book vacations in advance, not the other way around. Right. So in other words, my work has to revolve around my real passion is travel in the world. So my goal is to get to visit 100 countries, and I'm at 75, 76 now, something like that. And so I have to visit so many countries every year. That's booked ahead of time. And then, as I said, then I have to have so much time that I spend with my customers. That's booked ahead of time. And then there's so much time I have to spend with my team. And then there's time that you have to book that you just sit there and do nothing. It's what I call my strategic time. And so at least 3 hours every week has to be strategic time. No calls, no meetings, no nothing. And it's marked in red so everybody knows that I don't care who it is, nobody's getting into that time. And once you develop those habits, because there's not really, and one of the questions about motivation, you're never motivated. Never. You never want to go to the gym. You never want to spend time just doing that. People get off on like this thing called chaos. But if you can control time through habits, then everything else is easy. Right? You don't even think about it because it's such a habit. That's the way it works, right? After my last call every day, I go to the gym. Like, that's just how it works. I don't even think about it. I'm putting my stuff on before I even realize that I'm halfway to the gym.
Oh, man. And so you'll find the higher you go up, the more serious you need to, be able to look at your time. I mean, be jealous of your time, as Chris says, which is so powerful. So you gave some really good, go ahead.
No, and as I was going to also suggest is as you get a bigger and bigger team, some people just like meeting with you and talking about crap. So it's, Arthur Ruin, you probably heard this because I stole it somewhere else too. It's like no agenda and no attenda. Like if I don't know what we're going to talk about, there's no meeting. Yeah. And if I can answer it with an email, then we have an email, right? So I'm not just hanging around with people. When it comes to work, I have all day to sit with somebody, have a coffee or a glass of wine or talk over a steak. But on a work day, you have to be incredibly disciplined.
I love that. We need an agenda before the meeting. Otherwise, there's no meeting. No agenda, right. No agenda.
No agenda, no attenda. And everyone knows that. And I just send that. I'm like, I'm not attending because I'm not adding value to anything that's being discussed here.
Oh, that's so great. One thing that I'll add to that, to when you're going into these meetings or the Got a Minute, or maybe you're not at that level yet where you're still very at the day-to-day, you don't have a leadership team looking after all the day-to-day, and you do want to buy back your time. One of the tips that I heard, actually it was from Darren Hardy. He had said, listen, and then it was Dan Martell now recently, he reiterated it, but originally it was Darren Hardy, where you have people coming in and they're always throwing monkeys on your desk, right? Like, I got a problem, I got this, and they got that. You probably heard of this, Chris, already, right? Where
I haven't, but I've been that person.
Yeah, right. Where it's like, oh, I got this problem, and as a leader, you want to be valuable, so you're like coming in, you're rescuing them, like, and so you're coming in, you're giving answers, or they come in and they throw the monkey on the desk and then they run out, and then you got like, leave, I got all this other work and now I got the monkey, their monkey too. So what was really helpful is to actually moving forward with people is just making it clear, asking a couple of questions. And the first one that they need to come in, they need to clarify what the actual problem is, to succinctly say it, which is challenging in most cases because sometimes they're coming with a problem that maybe isn't the true we'll say foundational problem. And then you got to, in order for you to answer any sort of problem, they got to come up with 3 solutions to that problem that they identified. So they got to come in before, you're not just going to handle it or solve their problem. What's the problem? They got to say, what are 3 potential solutions? And then which one do they think is best? And
I like that.
Right. And so what that does is it allows them to, you're training them how to make quality decisions. And so that's where I found, as you scale up, that instead of you being the decision maker for everything, you want to be able to train your people, give filters, mechanisms to be able to train them so that they can make that. But the really powerful, I love that, with clarity in meetings and jealous on your time. Now, just a quick question on your 3 hours of strategic time that you do on a day-to-day basis, or on a week-to-week basis. Week. What do you do for strategic work during those 3 hours? Like, what would you say is strategic work for the listeners out there that maybe they can substantiate what that actually is?
Well, if 1/3 of your time is spent with your clients, then, from that point, you would then sit down and go through. I'm a note guy, so I always have a notepad, by me, and I would go through that and say, so what are the major themes that are coming out? What are the things? And then that's what I think about, like, what would be a good solution to this, or why. There's the 5 whys. You've probably heard of that in Six Sigma, right? Whereas if this is happening, why does that happen? And then why does that happen? And then why does that happen? And if we can just fix it down here, as opposed to just patching it every time. So that's what I mean by strategic work. And then, so that's part of it, is what are my customers saying, and what are their problems? So, some other opportunities, and some of the things that we've launched, are a result of people just giving me, I wish we could do this. And I'm like, I wish you could do that too. So maybe we should do that. Or, have you looked at, helping me here? And I'm like, yes, maybe we should. So those things are what I mean by strategic. It's just sitting there and thinking about the information that you've absorbed, because a lot of people take notes, and then a month goes by and they're like, oh yeah, I remember so and so was complaining about that before, we should have done something about that. So that's what and then the only other thing that I look for is just general trends, and it doesn't have to be in our industry. It can be in any industry. Like, what are the things that are moving the needle on other companies, and is there a way that we could implement that into our company? But of the two, the first one tends to take up more of the time. It's more of the practical, what are the people that I really need to cater to saying to me, and what do they want?
That's really great. Great questions. And that book by Keith Cunningham, The Road Less Stupid, he actually has, if you're thinking about what kind of questions should I ask, I mean, Chris gave some really great examples. If you wanted to add to that, he's got like chapters of great questions that, leaders can make, but just, it's really powerful principle that Chris shared there. And I mean, obviously his results speak for themselves. So Chris, thanks for sharing that. Now, maybe shifting gears a little bit, do you think that from an investing standpoint, so listeners are out there, they're making money, there's the financial investing, which is great, having a really strong advisor advising them. Do you feel that as part of like an overall portfolio, that real estate it plays a part of that, of a strong portfolio? Maybe you could speak to that, because you've obviously, in the financial industry, and then, you've seen it through your career as well, real estate overall. What's your kind of position on that? And do you think it forms as part of an overall portfolio?
So first of all, as an asset class, nobody can argue with real estate as an asset class, right? And especially if you live in Toronto and you bought some stuff 20 years ago, you'd be the happiest guy around. And if you can find other markets that are going to be Toronto at some point, even better. So as an asset class, as I said, nobody can argue with real estate. And
yes.
I forget what the stat is of the multi-billionaires, but at least a third have made their billions through the investment in real estate. So no one can argue with that, and it should make up part of the portfolio. the challenge comes with real estate, as it comes with stocks, as it comes with really any securities, is if you don't know what you're doing, it can be a very painful learning experience. As someone who's owned, residential real estate and rental real estate, and having tenants that I would like to kill, or that, order pizza on your credit card, or that, don't pay the rent, like those nightmare stories are out there. And as I said, if you don't know what you're doing, that's the biggest challenge. It's not the investment itself. The investment's great.
Yeah.
But find somebody or work with people who know what they're doing. It's not as easy. You read, some people go to these courses and read a book and they're like, oh, I got to go buy a bunch of residential real estate. I'm like, have you ever had a tenant that wouldn't leave? Like, have you ever had, you can go through the scenarios. You've probably seen the movie Pacific Heights. And if you haven't, that will teach you everything you need to know about owning individual properties when you're highly leveraged. So to answer your question, absolutely. Should it make up people's portfolio? Absolutely. Should an amateur get at it?
Yeah.
I don't know.
First off, I'm going to watch that movie because I haven't seen that yet. But I totally agree with you, Chris, because there's leverage. You're basically leveraging something. I mean, if you put 25% down payment, you can leverage something 4 times greater. If it goes up 25%, you basically double your money. But if it goes down, I mean, then, so you definitely need to protect yourself. And what we found, there's 3 kind of rules we look through the cycles. And there are 3 rules that we do on the real estate investment firm. Is one, we only lock in, we only take rates that are fixed. The second thing, so fixed long-term rates, because there's a lot of operators now that are underwater because interest rates double. The second is like cash reserves at the property level. And then the third is buying properties that cash flow from day one. So you're not eating yourself up. But you're right. It's if you're not with an experienced operator, 1,000%, Chris, I totally agree. So you got to be mindful of that. But again, it forms as part of an overall portfolio, right? And I think that's really important.
Yeah, I think there's no silver bullet, but that's right. Why diversification counts. But in all diversification, get somebody who knows what they're doing. It's a full-time job. I'm in the business, and I have somebody who looks at my portfolio as regularly as I do. And I've been in the business 30 years because you fall in love with your own ideas. You need some objective people that say that's stupid, and it helps.
Yeah. Which is really another great point, is you want to surround yourself with people that will tell you the truth and not tell you what you want to hear. A bunch of yes people, right?
Exactly. In fact, you want a lot of glum no people, because they can balance, especially, entrepreneurs who are optimistic by nature, as I am. You need some people trying to bring you back to reality every once in a while.
Yeah. Oh, you just nailed the entrepreneur very well there. It's like, the optimist, so to speak, right? In general.
No, my sky's always sunny and blue. So I need somebody with some glum skies every once in a while to taper down some of those ideas.
Yeah. Well, Chris, this is like phenomenal conversation. I could speak to you for hours because I feel like we just, hit the kind of the tip of the iceberg here. We got 3 questions here. You ready for rapid fire?
I'm ready.
You shared some really great suggestion for book with the E-Myth there, but that's the question, is what's your favorite book? Is there something that stands out that you believe was the biggest help to your overall business?
Well, since I've already sort of had all the accolades about the E-Myth, I would talk about, of course, Good to Great as well. I don't think you can, have a business conversation from somebody who hasn't read, the differences of Good to Great and the whole. What can you be the best at? What are you passionate at? And what drives your economic engine? And when I'm mentoring not only entrepreneurs, but I also do a lot of work with young people, in universities. So first thing I do is I get them to draw those 3 circles on a piece of paper. And I said, when you can fill those in adequately, then we have a basis for conversation. But if you don't know what you can be the best at the world, if you don't know what you're passionate about, and if you don't know if it's going to drive an economic engine, you have no point in getting into business. And so that comes from Good to Great. So I'd highly recommend that for anyone who hasn't read it.
Well, there you heard it. Good to Great. Jim Collins, definitely check that book out. Last question is, what advice would you give your younger self? So if there's there's so much on this that is just a mountain of information here, but if there's anything that you'd say, okay, here's a a last piece of advice that you want to leave our listeners with?
Simple. It's so easy to let complexity kill everything, and it's easy. Again, I'm in the wealth management business. 30,000 different funds alone. There's different. Everyone's got an idea. Everyone's got a scheme, and if you keep looking for all those, if you could just keep it really simple, I'd be far more successful if I didn't have as much of the complexity that I allowed build, in the business and in my life. And, what set me free was, pushing all the way and just going back to that whole concept of simplicity. So I could have saved myself a good 10 years if I was telling my younger self, don't make things complicated. And again, and that also comes back, not everybody is your client. So if you can realize those two things, keep it simple, and not everybody's your client. As I said, I would have saved a good 10 years of my trajectory with just those two pieces of advice.
Sound wisdom from Chris Reynolds. Chris, thank you so much. How can the listeners reach out, or maybe reach out to your, the financial company if they want to, whether it's financial advisor or, anything, what's the best way for them to reach out to you?
Well, certainly anyone can go to, the company website, which is Investment Planning Council, ipcc.ca. You can go on there, but more of what I need desperately is I need more listeners for my podcast. I got my mom, I got a few other people. So hopefully that this will be some unsolicited, some self-promotion here.
Yeah.
But Turning the Page, you can get it on any of the platforms. If you go to Spotify or any of the platforms, you can find Turning the Page. And hopefully there's some other lessons like this one that people might enjoy. And if anyone wants to give me some feedback or would enjoy another type of episode, always open to hearing what everyone has to say.
What's the main focus for that Turning the Page? What can the listeners expect when they go? Because definitely want to check this out, because Chris is one of the best business guys that I've met. Like he's proven, and his background is extremely long and successful. So what can is it overall business, entrepreneurial?
It's really centralized around the entrepreneurial theme. And I bring different guests in. We've had someone from Disney. We have someone from Strategic Coach. We have someone from, various successful businesses, as well as other people in the accolades. Now it has a wealth management bent because, I'm in the wealth management business. So it tends to revolve, just like yours in real estate, mine more around the wealth management, but it's really there. The founding of the company is based around a singular principle, which is help people build a better business. And that's been my whole life mission. I want to help people build a better business. And whether that's, directly through the organization or myself, or as I said, I do a great deal of mentoring as well to young people. It's all about building a better business.
There you have it. We have Chris Reynolds helping people build a better business. Thank you so much, Chris. This is great.
Thank you, Mark. This has been very enjoyable.
Yeah, right on. All right, guys. Well, thank you for listening to another episode of the Mark Faris Experience. I love you guys, and come check us out next week.